Welcome back. We have another Investing 101 lesson from our Paynes pro, Matt McCall. Sometimes the biggest names aren't the ones that are going to make you the most money. Some are flying under the radar. Matt, what did you find?
Well, when it comes to investing, a lot of times investors like to invest in these big names or the hot stocks that are out there. The biggest companies in the market. Apple's a great example. You realize retail investors in the United States, it's the most widely held stock out there right now. But people own more Apple than any other stock out there. Well, Apple shareholders, sure, they're smiling all the way to the bank. But the problem is this strategy is not always the best option. What happens many times is you're buying the hot stock, everybody's talking about the cocktail party, but then that's the top. Let's look back in 1999. The cover of Time magazine, Jeff Bezos, CEO of Amazon. Well, if you bought Amazon stock on that, you bought about $113 a share. Well, just a couple years later, it's trading at $5 and change. Not the best investment you ever made. So people oftentimes are running out trying to buy that hot stock. Well, what I did today is we look outside the box. We found stocks that we consider flying under the radar, stocks that aren't really covered by Wall Street, investors probably never heard of, but they're solid companies. Maybe we're going to find you the next Apple. So let's take a look at the first stock. I'll tell you, this one was very tough for me to put on the board because it's all about cats and dogs. They sell supplies to vets. I am not an animal person. If you watch the show at all, not a dog person. But I'll tell you what, I saw the chart. I saw earnings per share over the next 4 years growing annually 27%. And what I love about this, it's recession proof. I don't care if times are bad. You're not buying new socks like I put on today, but you're always going to buy your dog, your cat, and take care of them. So look at this great flying under the radar stock. Next, we're going to take a look at, you probably never heard of this one either, Acorn Incorporated. It's a generic drug maker. So I like this because a lot of drugs are niche drugs. Again, nobody never heard of them. They go after diseases that aren't, big diseases, very rare, very strong pipeline. They have 87 drugs right now in abbreviated new drug status. 4 of them already got approval. So big upside there, and it's a potential takeover target. And then last year, it bought 2 stocks, but look at this. I think this could be taken over. Not buying it just for that, but I love the generic drug sector. So, Deirdre, we got flying under the radar stocks. I like giving people names they never heard of.
I'm worried about this I hate dogs and cats thing.
Did you get like holding a dog or something?
That ruined my comment about being surrounded by women. I just ruined it with that.
I was just going to say, there you go. You're net neutral at this point. But, Hilary, what do you make of his picks?
Oh, I love this that Matt brought up the fact that you have these really small cap stocks. And as Wall Street is covering less and less stocks on the sell side, writing up research, some of these companies are great values. One of the companies I love is Miller Industries, MLR, a 2.8% dividend yield. Oh, I'll do a call out to Tennessee. They're based in Ooltewah, Tennessee. The Miller family. These are tow trucks. Tow trucks, hydraulic lifts, wreck carriers. I mean, this is what this company does. And the growth, of course, isn't as stellar as, some of the tech area itself.
But I like what you're saying about maybe it's undiscovered or a little bit less discovered, less trodden than some of the bigger names that Matt was talking about. So it's opportunity.
Exactly. Eventually it'll either be taken out or you can just sit around and hold a company that makes the tow trucks chassis and to collect 2.8% and wait for the day that maybe a larger player, truck manufacturer, is going to.
Especially if it's well run and you've taken the time, as you obviously have, to look at the financials, you feel like, okay, it's a solid business model.
Right, and so many of these companies are run by families, and many of the families might have more of a majority, and so a lot of investors don't want to go into them, but it's such a great opportunity.
And when the Apple iCar starts breaking down, they can come pick it up.
I like the topic a lot. I know GoPro, for example, is the high flyer, but Ambarella, AMBA, makes all the chips that go into every camera that GoPro sells. And the fact is, GoPro might have margin squeezes, might have turnover, might have insider selling. They're the ones getting all the headlines, but Ambarella continues to feed that machine with chips. And I think that to me is under the radar.
Which is a great idea because this is the idea of the ecosystem, right?
Yes.
Even if, for example, GoPro is not your camera of choice, these chips are going in all of these cool, fun cameras.
Correct. And I think GoPro is going to really be a camera company, less of a media company, which is why, but they're going to sell a lot of cameras. And Ambarella is going to benefit from everyone
Ask any skier, ask any snowboarder, ask any hiker, canoer. They usually have GoPros. All right. Well, they